Thank you very much. Welcome to this training. Today, we are going to discuss and learn how to audit related party transactions. I would like to emphasize, though, that this training for this account focuses on certain and typical substantive testing procedures only and assumes that no tests of controls were performed by the audit team. Tests of controls and their impact on substantive testing will be discussed in other training courses. But before we start today's training, let's watch first this story from TV station WKW7 Eyewitness News.
Eyewitness News reporter John Cossack was in Pennsylvania today, and he is here now with the story.
Keith and Susan, the shockwaves created by the Regas arrest may have been felt across the country today, but it is clear that the community of Coudersport was the epicenter. Kay's Hometown Restaurant sits just a few doors away from Adelphia's Coudersport headquarters. It is here where founder and former CEO John Regas enjoyed lunch from time to time. On this day, though, he's not at a table here, but on the television, being led away in handcuffs. For many like Kay Gerhardt, it's almost too much to bear.
They're making him look, like a total criminal, and he is such a good man. He's done so much good for our community, and they're neglecting to tell of the good that he's done.
Many of the people at Coudersport were resigned to the fact that the Regases would be indicted. What they did not expect was the out-and-out criminal roundup that happened this morning in New York City.
Well, I don't think that's necessary. I think he's old enough. He isn't going to do anything.
I don't think they were a danger to run away. I mean, their assets, whatever they have, are still here.
Yes, Coudersport, the Regases, and Adelphia are all intertwined. The folks here know without the Regases, the nation's sixth largest cable company wouldn't be located in this quiet town. But they also know that it is because of the Regases' alleged dealings that their very future is in jeopardy.
Well, I work for Adelphia, so yeah, it's really mixed emotions. You want to see the right things happen, but you also have to wonder how it affects you on a day-to-day kind of things.
Others take a more philosophical view.
Town was here before Adelphia. It'll be here after Adelphia. That's the way I look at it.
But obviously the hope is the cable giant somehow is able to weather the storm and remain the force that it is in Coudersport. Susan?
Okay, so the video is about the arrest of Mr. John Regas, who founded Adelphia Communications Corporation. If you are not familiar with this case, Adelphia used to be one of the largest cable companies in the U.S. You may be wondering what the news about the arrest of Mr. Regas has got to do with our training topic today. Is the arrest even remotely connected? Well, all I can say at this point is very much so, and you will find out how and why it is connected as we go along this training session. But first, let's see what the objectives are of this of our training for today. The first one is to obtain basic understanding of related parties and transactions. The second one is to learn about some of the common risks relating to related parties and transactions. The next objective is to learn the principal audit objectives in auditing related parties and transactions. And finally, to learn about the substantive audit procedures typically performed on related parties and transactions. So we will conduct this training in accordance with the sequence of these objectives, in accordance with the sequence of these objectives of the training session for today. So let's begin by understanding first what are related party transactions. Philippine Accounting Standards, or PAS number 24, Related Party Disclosures, defines a related party transaction as the transfer of resources, services, or obligations between related parties, regardless of whether a price is charged. So, take note in particular yung huling phrase which is whether a price is charged. So, regardless kung merong price between the related parties, let me backtrack. Regardless whether may price or wala, doon sa transaction made between the related parties, it is still considered a related party transactions as long as it is between related parties, as long as the transaction was conducted between related parties. So kahit zero, kahit walang charge, kasi di ba normally nakikita naman talaga natin to yung mga transaction na walang bayad, hindi binabayaran yung isang related party. So kahit walang bayad, considered pa rin siya as related parties. So in other words, a related party transaction pertains to any deal, undertaking, business, or similar arrangements made between parties who are connected by a pre-existing relationship or shared interest regardless of whether a price is charged or not. This means that even if there's no money involved, a transaction can still be considered a related party transaction as long as the parties involved qualify as related parties. As I said, as long as the transaction is between related parties, considered siya as related party transaction. Related party transactions can come in all forms and shapes. Examples of related party transactions are the sale of goods and services, granting and receiving loans and advances, purchases of goods and services, investments in shares of stock, leases, compensation, and any other type of transaction between related parties. I think this is one of the questions I got earlier, kung ano yung mga common types daw of related party transactions. So these are the common types of related party transactions. So put it another way, for a transaction to be considered a related party transaction, such transaction should have been made between related parties. So kung hindi related parties yung nag-transact, hindi pwedeng tawaging related party transactions yon. So who are considered related parties? Can a company consider as a related party the spouse of a majority stockholder of the company? What about the majority stockholder's son? What about two companies that share the same accounting manager? Are the two companies considered related parties? So what does PAS 24 say about this? Let's see. According to PAS 24, a related party can be a person or an entity that is related to the reporting entity. So as long as, so it can either be a person, an individual, or an entity. A person or a close member of that person's family, this is a related party, this is considered a related party. A person or a close member of that person's family, if that person has control or joint control over the reporting entity, has significant influence over the reporting entity, or is a member of the key management personnel of the reporting entity or of a parent of the reporting entity. So, ang keyword dito sa last is key management. Dapat key management ka. Kung hindi ka naman key management, like for example, ordinary employee ka lang, hindi ka mako-consider na related party. An entity, on the other hand, is related to a reporting entity if any of the following conditions applies. 1, the entity and the reporting entity are members of the same group, which means that each parent, subsidiary, and fellow subsidiary is related to the others. Another is, one entity is an associate or joint venture of the other entity, or an associate or joint venture of a member of a group of which the entity is a member. Both entities are joint ventures of the same third party. An entity is considered a related party when it is a joint venture of a third entity and the other entity is an associate of the third entity, of the same entity. Another is the entity is a post-employee. Another related party is an entity that is a post-employment defined benefit plan for the benefit of employees of either the reporting entity or an entity related to the reporting entity. If the reporting entity is itself such a plan, the sponsoring employers are also related to the reporting entity. Another is the entity or any member of a group of which it is a part provides key management personnel services to the reporting entity or to the parent of the reporting entity. An entity is considered a related party when it is controlled or jointly controlled by a person or a close member of that person's family. Finally, a related party is a person or a close member of that person's family identified as having control or joint control of an entity, has significant influence over the other entity, or is a member of key management of the entity. So who are not considered related parties? The following are deemed not to be related parties. So these are the individuals or entities that are not considered related parties. Two entities simply because they have a director or key manager in common. Two venturers who share joint control over a joint venture. So ibig sabihin, kunwari, yung joint venture partners are not considered related parties in as far as yung JV is concerned. The next one is providers of finance, trade unions, public utilities, and departments and agencies of a government that does not control, jointly control, or significantly influence the reporting entity simply by virtue of their normal dealings with an entity, even though they may affect the freedom of action of an entity or participate in its decision making. So in other words, ang government cannot be considered a related party even if we conduct business with the government regularly, hindi siya considered as related party. And finally, a single customer, supplier, franchisor, distributor, or general agent with whom an entity transacts a significant volume of business merely by virtue of the resulting economic dependence. So hindi ibig sabihin na marami tayong transactions with a certain entity, considered na siya na related party. Hindi ganon nagwo-work ang related party transactions. So to answer our question earlier about whether two companies sharing the same accounting manager are considered related parties, the accounting standard clearly says no. So kung yung accounting manager is doing like he's the accounting manager for two companies, hindi considered as related companies by virtue of yung sharing nila nung accounting manager. Remember what I have just said, that according to PAS 24, two entities are not considered related parties simply because they have a director or key manager in common. What about the spouse and the son of the majority stockholder? Remember, I asked that earlier as well. Are they related parties? Yung spouse, yung asawa, and yung son or daughter, kung daughter, yung child, basically, yung majority stockholder, are they related parties to the entity? The answer to this is yes, only if the spouse or the son exercises control or has significant influence over the company. For example, when the spouse or the son or the daughter is the CEO of the company. Because as the CEO, the spouse or the child can use their position, authority, and influence to make decisions on the company's operations and activities. So, since key management yung spouse or yung son, considered sila as related party nung entity by virtue of being related to the majority stockholder. But if the spouse or son or daughter does not participate, for example, in the company's activities, then they are not considered related parties. So kung wala naman silang involvement dun sa company, we cannot consider them as related parties of the entity. So let's take this another example about X and Y, husband and wife X and Y. This is the question. So X and Y are husband and wife. Husband X has a controlling interest in company A, while his wife Y has an investment in company B. Wife Y has neither control nor significant influence over company B. Wife Y is also not part of company B's key management. So are companies A and B related parties? The answer to this relationship is no. Company A and Company B are not related parties. If you can remember, we said, or I said, that two entities are considered related parties if one entity is controlled or jointly controlled by a person or a close member of that person's family, and that person or the close member or the close family member has significant influence over the other entity or is a member of key management. So there are 4 important conditions that need to be met for Company A and Company B to be considered related parties. So let's take off and break them down. First condition is close family member. So the wife is a close family member. So check. So related party, di ba? Sa condition. Parang related party siya ngayon. What about control? As husband X has control over company A. So check. Significant influence, and then the third and fourth conditions are significant influence and key management. So this is where the answer no came from. Wife Y has no significant control nor significant influence over company B, and wife Y also is not part of the company's key management. So wala naman siyang role basically sa company B. So hindi siya, so that means si company A and si company B are not related parties. However, companies A and B will be considered related parties if husband X controls company A and wife Y controls or has significant influence over company B. The same is true if wife Y controls company B and husband X controls or has significant influence over company A. So kung wala silang kung si Y kahit na stockholder siya, pero wala naman siyang significant influence or control over the entity, tapos yung si company A na pag-aari naman din ng asawa niya, yung asawa din niya wala ring control or significant influence, hindi sila pwedeng i-consider na related parties. Pero, kung meron silang involvement, significant involvement dun sa mga companies where they own the shares of stock, then the companies A and B will be considered related parties. So I hope that's clear to you kung paano mag-recognize, kung paano mag-analyze at tingnan ang relationship among entities and individuals. Meaning kung naghahanap tayo or we're trying to identify related parties, we should know these conditions. So what if X and Y has significant influence over company A and company B respectively? Are companies A and B related parties? So significant influence, they have significant influence. The answer is still no. because the control requirement from a person or close family member of that person for entities to be considered related parties is missing. Remember, ang 4 conditions na sinabi natin kanina is close family member, control, significant influence, and key management. So in this case, wala kasing walang control na requirement or walang control both si husband X and si husband Y sa mga companies na that they own. Ang meron lang sila, significant influence. Ang requirement kasi, control and significant influence, 4 siya, di ba? Close member, control, significant influence, and key management. So kung sakali, basically ganito, kung si Y may significant controls kay company B, si X may control, may significant, what did I say? Let me backtrack. Si Y may significant influence kay company B. Si X may control kay company A. Related party sila kasi yung isa may control, yung isa may significant influence. Pero in this case, pareho, significant influence lang pareho. So yung control condition, nawala siya. So kaya considered sila, hindi sila considered as related parties. I hope, okay, so I hope medyo nagiging clear sa inyo yung identification ng related parties, especially involving individuals. So now that we have learned who are considered related parties, let's now discuss these words that are always, or this word that is always associated to related party transactions. And this is arm's length. What is, lagi nating naririnig yan, kapag may related party transactions, parang automatic, lagi mong maririnig yung arm's length na term. So what is the meaning of arm's length? According to Philippine Standard on Auditing number 550, related parties, an arm's length transaction is a transaction conducted on such terms and conditions as between a willing buyer and a willing seller who are unrelated and are acting independently of each other and pursuing their own best interests. So essentially, the accounting standards and tax rules required all entities to treat all of their related parties the same way they treat to treat all of their related party transactions the same way they treat their transactions with third parties. However, as I have said, so ibig sabihin, kung paano i-treat ng company ang isang third party, dapat ganun din itinitreat ang related parties. However, as I have said earlier, there is always a risk that related party transactions are not done on an arm's length basis. Rather, these companies give related parties advantageous treatment. And I think common knowledge naman yon. For example, a company may be selling materials to a related party at a lower price compared to the selling price given to third-party customers of the same materials. Or a company may also extend loans free of interest to a related party. Whereas had the loans been extended to a third party, the company would be charging interest. So, yung mga advances to related parties na free of interest, normally, pag yung advances na yun binigay nila sa third party, nag-charge sila ng interest. Pero pag related party, free of interest ang ginagawa nila. So because of this favorable treatment and possible conflicts of interest that arise from related party transactions, more scrutiny is given to this type of transaction. And undoubtedly, related party transactions had been and continue to be one of the usual sources of fraud in companies. In fact, the development of the Sarbanes-Oxley Act of 2002 was a product of one of the biggest accounting scandals in the world, which was the Enron Corporation accounting scandal. Enron, as I have discussed in other training sessions, hid billions of dollars of debts in special purpose vehicles or SPEs, which Enron had an interest in and therefore considered as related parties. Based on the equity compositions of the SPEs, such SPEs should have been consolidated with the financial statements of Enron. But Enron did not consolidate the SPEs with their financial statements and did not make full disclosures about the transactions it had with the SPEs. Itinago ni Enron. This accounting scandal was so big that not only was the Sarbanes-Oxley Act was developed to, among others, limit conflicts of interest arising from related party transactions, but its auditors, Arthur Andersen, the top auditing firm in the world at that time, had to dissolve itself because of the scandal. So wala nang Arthur Andersen ngayon. Nag-implode. Nagkaroon ng implosion sa Arthur Andersen. And many more accounting scandals had been reported involving related parties. And this is why properly disclosing all relevant information about related party transactions is very important. So let's now move on to the common risks associated to related party transactions. But before moving on, just remember or always remember actually this scandal that happened to Enron. Had Enron fully disclosed yung relationship nila sa SPEs, hindi sila makakapag-hide ng billions of dollars that made them basically went bankrupt nung na-discover. So, yun ang importance ng full disclosure ng related party transactions. That's how important related party transactions are. Namamanipulate kasi since related parties nga. Madaling manipulate. So, anyway, let's now move on to the common risks associated to related party transactions. Please note that these risks are not all inclusive, and we'll just be discussing 4 of these risks. Many related party transactions are actually in the normal course of business. However, the nature of related party transactions and relationships may in some circumstances result in higher risk of material misstatements compared to transactions with unrelated or third parties. So here are some of the common risks that we should be worried about and that we should be wary of about related party relationships and transactions. These are complex relationships and transactions, inadequate information systems, transactions not at arm's length, and the susceptibility to fraud of related party transactions. So let's briefly discuss each of these common risks. The first one is complex relationship and transactions. Related parties may operate through an extensive and complex range of relationships and structures with a corresponding increase in the complexity of related party transactions. Here's an example of a very complex related party relationship involving the Lotte Group of companies. So ito yung corporate structure niya or group structure ng Lotte Group. If you have eaten any of these chewing gums, then yes, that's one of the Lotte companies we're talking about here. So ito yung part ito ng Lotte Group. But going back to this image that was prepared by Professor Jang Ha-sung of Korea University, the image shows the complex share ownership structure of the Lotte Group's Korean units. Korea pa lang to ha. According to a report in 2016, this cross-shareholding within the Lotte Group of companies, which had over 130 member entities at that time in 2016, 130 members na siya, allowed the founders, Shin Kyuk-ho, his wife and 2 sons, to control the conglomerate with just 2.4% of equity. So 2.4% lang ang hawak nila sa grupo, and yet they have the control already over the group. Note that this chart was prepared in 2016. Just imagine how many more companies were added to the group since this chart was made. I know for a fact that Lotte bought a logistics company recently in Cambodia. Lotte also has its presence in the Philippines now. For example, currently, Lotte Chilsung Beverage Company Limited is the controlling stockholder of Pepsi-Cola Products Philippines. So, all over the world na sila ngayon. This complicated group structure was sa Korea pa lang, and hindi pa kasama yung nasa ibang bansa. With this kind of cross-shareholding, you can just imagine how easy it is to possibly commit an error in accounting for all related parties and their transactions and in consolidation. For example, which companies are to be consolidated? Which companies are to be treated as associates? Which company or companies will need to be included in the consolidated financial statements? What transactions are to be eliminated given this complicated group structure? So just think how a 2.4% shareholding translated to a controlling interest in all of these companies. Mind-boggling comes to mind. So the next common risk is inadequate information systems. The company's information systems may be ineffective at identifying or summarizing transactions and outstanding balances between an entity and its related parties. Most, if not all, computerized accounting systems available in the market are not designed to track down related party transactions. These accounting systems are usually designed to identify and summarize the list of debtors, creditors, sales, purchases, fixed assets, etc., but not related party transactions. So if the company engages in trade and non-trade transactions with various related parties, just like the Lotte Group, it may prove difficult or at the very least time-consuming to identify or summarize the transactions during the year and the outstanding balances with the company and its related parties. It may already be difficult to identify related parties and transactions using a computerized accounting system, so what more for a manual accounting system? Another common risk is that transactions are not conducted at arm's length. Related party transactions may not be conducted under normal market terms and conditions. For example, some related party transactions may be conducted with no exchange of consideration. This is a common practice in the Philippines. Actually, hindi lang naman sa Pilipinas but all over the world. This especially happens when one of the parties involved has no operation or with few transactions only. For example, because a purely holding company does not have any activity other than the receipt of dividends from its subsidiary and has few other transactions only, the administrative function of the holding company is typically performed by the subsidiary's management at no cost. Although this setup may make sense for the entities involved, this is actually one of the areas the BIR's transfer pricing rules aim to address. As we know, the BIR may and can perform adjustments during a tax audit to reflect the approximate arm's length price or rate for a taxpayer's related party transaction in case it is not compliant with the arm's length principle. Accordingly, the BIR may tax the subsidiary for unrecorded income on the administrative services it renders to the holding company. Finally, the last common risk we will briefly discuss about related parties is its susceptibility to fraud. Related party transactions may be motivated solely or in large measure to engage in fraudulent financial reporting or conceal misappropriation of assets. We already discussed how Enron took advantage of its related party relationships and how fraudulent activity brought the company to bankruptcy and the auditing firm to implosion. So let's now take a look at how fraudulent related party transactions led to the arrest of Mr. John Rigas. I hope you remember him. He was the guy from the video we just watched at the beginning of this training. Well, according to reports, Mr. Rigas, the founder of Adelphia Communications Corporation, his two sons and another senior officer of the company defrauded the stakeholders of the company from 1998 to 2001 with billions of dollars by understating its liabilities, overstating its earnings, overstating its operational performance by exaggerating the number of its subscribers, and concealing or non-disclosing self-dealings with their family, such as taking of Adelphia funds to build golf courses in the family's own land, and to purchase personal assets such as luxury cars and an acre of timberland so the family could preserve the view to their house, among others. The Rigases were accused of diverting Adelphia funds to their family by an amount of no less than $250 million. And this led to their arrest. Adelphia subsequently went bankrupt with its assets sold to other cable companies. So now that we have discussed the common risks, let's now move on to the principal audit objectives in auditing related parties. Our overall objective in auditing related party transactions is to obtain sufficient appropriate audit evidence to determine whether related parties and relationships and transactions with related parties have been properly identified, accounted for, and disclosed in the financial statements. The detailed objectives, on the other hand, are the following. First is all receivables from and payables to related parties on the balance sheet exist, and all recorded income and expenses from receivables, payables, and advances have accrued to the entity at the balance sheet date. The next audit objective is for all receivables from, payables to, and advances to and from related parties are included on the balance sheet, and all related income and expenses accruing at the balance sheet date have been recorded. Another audit objective is to ascertain that receivables from, payables to, and advances to and from related parties are included on the balance sheet at the appropriate amounts, and the related income and expenses are stated on the income statement at the appropriate amount. The fourth audit objective is to determine or ascertain that the entity owns or has the legal right to all the receivables from and advances to related parties. The payables to and advances from related parties represent obligations of the entity at the balance sheet date, and that all receivables and advances are free of liens, pledges, or other security interests, or if not, such liens, pledges, or other security interests are identified. The last audit objective is to ascertain that receivables, advances, and related income accounts are properly classified, described, and disclosed in the financial statements, including notes in conformity with prescribed accounting principles. So basically, the same siya sa lahat ng iba pa nating audit objectives. Similar siya to the audit objectives we discussed for other accounts before. So these objectives essentially addresses yung existence, completeness, valuation, rights and obligation, and presentation and disclosure. And please note that apart from these audit objectives, We must also ensure that we have sufficient understanding of related party relationship and transactions to enable us to recognize fraud risk factors, if any, arising from related party relationships and transactions. Remember, isa sa common reason na discuss natin is yung susceptibility to fraud ng related party transactions. And to conclude whether based on the audit evidence we have, whether the financial statements, insofar as they are affected by those relationships and transactions, are fairly presented. To achieve all these audit objectives, we should be able to design and execute substantive audit procedures that would address the risk of material misstatement associated with related parties and relationships and transactions with related parties. And to be able to design and implement appropriate audit responses, we need to perform risk assessment procedures. By the way, investments in a subsidiary, associate, and joint venture are also considered related party transactions. However, because there is a separate training held for the investments account, we will only cover in this training session the audit of receivable from, payables to, and advances to and from related parties. So let's now move on to the substantive audit procedures typically performed on related party transactions. So we'll now move on to the main objective of our training, which is the discussion of the substantive procedures typically performed on related party transactions. The very first audit procedure we perform is to prepare a lead schedule based on the trial balance provided to us by the client for due to and from related parties and other transactions with related parties. Please note that we should always ascertain that the amounts in the trial balance agree with the amounts in the general ledger. Here's an example of a lead schedule for related party balances. So these are the typical information that can be seen on a lead schedule. First is the name of the client, the engagement period, who prepared and reviewed the work papers, including the dates when the preparation and review were made, the account for which the lead schedule was made, the account number and account name, the work paper reference for cross-referencing, the unadjusted balances of each general ledger account making up the financial statement line item, columns for adjusting entries made by the client and the auditors, the final balances per current year and prior year, and the amount and percentile of changes between current and prior year balances. By the way, this detailed discussion of lead schedule is just to remind you of what a lead sheet should contain. This being the last training session for substantive testing. So I'm just presenting this to you just to remind you of what a lead schedule should look like. So after preparing the lead schedule, the next procedure we perform is an analytic review of the account balance. To perform this procedure, we compare the account balances with those of the prior period and investigate any significant changes, unexpected changes, or the absence of expected changes. Please note that the use of analytic review is not typical and in fact very rarely used as the primary procedure in auditing related party transactions. We typically use the analytic review procedure for this account as a corroborative test in combination with other procedures only. So hindi natin siya ginagamit typically as the primary audit procedure. Corroborative testing lang ang we only perform analytic review for corroborative purposes only, for corroboration purposes only. Meaning, we use it to confirm audit findings from other procedure to support management representation or to decrease our level of audit skepticism. Yun lang ang purpose ng pag-analytic review natin. So let's take, for example, the lead schedule I presented earlier. Assuming during the planning phase of the audit that we read in one of the minutes of meetings that the Board of Directors approved to obtain in December 20 CY an unsecured interest-bearing short-term loan amounting to 5 million pesos from Netulu Manufacturing Corp to finance its working capital requirements. In this regard, we expect to see a loan balance due to Netulu Manufacturing amounting to 5 million pesos as of December 31, 20 CY, because after all, the loan was to be obtained in December 20 CY already. However, because the general ledger only showed an outstanding balance of only 2.5 million pesos as of December 31, 20 CY, therefore, we should investigate the reason for this unexpected balance of the loan. Aside from the unexpected change in the loan payable balance, we should also investigate other significant changes noted. Let us assume that the audit team's agreed audit approach was to investigate any fluctuation in account balances equivalent to 10% and higher and 1/3 of the tolerable error. This means that we would also need to investigate the changes in the due from Netulu Power Limited and due to Netulu LLC balances, because they are remember, if you can see here, 1/3 of TE for this company is 366,667. So the changes that were identified are all higher than 366,667, and the related percentage is above 10%. So yun yung mga kailangan nating makuhanan ng explanation from the client. Because the analytic review is meant to provide corroborative evidence only, we can inquire initially from the client about the reasons for these changes. And then we substantiate the client's explanations during our audit of the account balances. So pwedeng we ask the client first kung ano yung reasons for these fluctuations, and then either gawin kaagad natin yung pag-substantiate ng ginawa nila, ng explanation nila, or we can parang set aside muna yung explanation, i-document lang natin sa work papers, and then we will go through the auditing procedures, kasi baka during the auditing process makuha natin yung masubstantiate natin yung explanation nung kliyente. So ang suggestion ko is hintayin nating matapos muna yung audit before saka natin babalikan yung explanation ng clients kung tama or mali yung explanation na binigay nila for the changes, for the unusual or significant changes noted in the balances. Next audit procedure is we obtain a schedule of due to and from related parties and other transactions with related parties. Once we have the schedule of related party transactions, we need to determine and document in our work papers our understanding of the nature, terms and conditions, basis of recording, and business purpose of investments and other transactions between affiliates or related parties. Please note that we should relate this documentation with the documentations on related parties we did during the risk assessment process in the planning phase of the audit. And also, for more efficient audit, we should request our clients to prepare a schedule of related party transactions in a format that already suits the required disclosures of the accounting standards. This disclosure information includes the nature of the relationship, the nature of the transactions, the amounts of the transactions during the year, the outstanding amounts of due to or from related parties as of the cutoff date or end of the year, The terms and conditions, including whether the receivables or payables are secured or interest-bearing, the nature or form of settlement, provision for impairment losses and the related allowance for impairment losses, and the details of any guarantees given or received. Remember to always present this information in the work papers for related party transactions. Dapat kompleto to sa work papers natin. If we can get a schedule of related party transactions in a format such as this, then good for us. In this regard, it is important that we communicate this format with the client at the earliest possible time and preferably during the planning phase of the audit to give the client enough time to prepare. So, dapat sinasabihan na kaagad natin yung kliyente nung format na gusto natin. Early, sinasabihan natin early yung kliyente nung format na gusto natin. This schedule has a roll-forward analysis type of format that complies with the format requirement of the Philippine SEC already. The format starts with the beginning outstanding balances and ends with the ending outstanding balance. The details of the transactions during the year have also been indicated for easier determination of items to test. All other conditions of each related party transaction, including the nature of the relationship and transactions, have also been covered in the schedule. So this type of schedule covers already all the required disclosure requirements, all the required disclosures of PAS 24. So giving us a schedule in this format would facilitate the conduct of the audit better, would make it easier for us to verify the related party disclosures that will be made by the client in their financial statements later, and will save us time in preparing a roll-forward analysis such as this. Because if the client did not provide the schedule of related party transactions in this format, then we may have to summarize and prepare the related party transactions in a roll-forward analysis such as this ourselves to enable us to verify the related party transactions disclosures in the financial statement. So kung hindi kasi gagawin ng client yung ganitong format, mapipilitang tayo ang gumawa. And syempre gusto natin sila na lang sana to save time. Para yung time natin, pwede nating divert to other important audit procedures pa. So as much as possible, we should strive to get a schedule of related party transactions in this format already. So pero hindi naman kasi natin pwedeng pilitin yung kliyente na gumawa ng ganitong format. Mag-request lang tayo kung gagawin nila, then good for us. Pag hindi, then we may have to prepare this format ourselves para madali nating verify yung related party disclosures na gagawin nila sa financial statements. Another audit procedure is to check the mathematical accuracy of the schedule and agree with general ledger balances. We should check the mathematical accuracy of the schedule of due to and from related parties and other transactions with related parties, and then agree the totals of the schedules with the amounts in the general ledger. Significant differences noted should be investigated and discussed with appropriate client personnel. So kung may na-receive tayong ganitong schedule, dapat tinitingnan pa rin natin yung movement, kung tama yung mathematical accuracy nung schedule. So for this example, yung vertical and horizontal computations na ginawa ng kliyente, dapat chine-check natin kung tama or mali. And of course, kung yung ending balances agree with the GL balances. So the next audit procedure is to confirm outstanding receivables and payables. Just like with transactions with unrelated customers, suppliers, or lenders, we also obtain confirmation of the receivables from, payables to, and advances from and to related parties. Please note that we should confirm not only the amounts and balances, but the terms and conditions of the transactions as well. And similar to what we do for trade receivables or trade payables, we also perform alternative procedures on significant related party balances for which we did not receive or have not received a confirmation reply yet. Like the alternative procedures performed on receivables, the alternative procedures for amounts due from a related party also include examination of subsequent collections and examination of source documents, such as invoices issued during the year for accounts with no subsequent collection or insubstantial subsequent collection. The same procedures are performed on payables to related parties, but instead of subsequent collections and sales invoices, we verify subsequent payments and/or invoices or other pertinent supporting documents from the concerned related party. But when our client engages in transactions with numerous related parties, we must prepare a separate confirmation control work paper such as this to monitor the confirmation process, including the results of the confirmation procedure. If the related parties are also our audit clients, we can, instead of sending confirmation requests, agree the account balances, including the terms and conditions, with those in the related parties records. So kung kliyente rin natin yung mga related parties, then we can just look at the books of those related parties. No need to confirm kasi ino-audit rin natin yung mga related party balances ng mga entities na yon. So we can use our work papers as well. So moving on to the next procedure, we review the reconciliation of related party balances, related party account balances. It's not uncommon. This is for when the related party confirm an amount that is different from what is recorded in the book. So we obtain reconciliation statements from the clients, from our client. So it's not uncommon for companies to have issues related to their related party transaction accounts. Some companies, especially those which do not require consolidation, tend to not have a policy of requiring a reconciliation of intercompany balances on a regular basis. Oftentimes, reconciliation of account balances is done once a year only, more specifically during the audit of the company's financial statement. So kung kailan lang may audit, doon lang titingnan kung reconciled sila with the other party. This results in piling up of reconciling items, which in turn lead to the reconciliation process taking longer than necessary. So unless a company has established controls to ensure that intercompany balances tie up at all times, the issue of unreconciled intercompany balances will persist and continue to grow. The causes of these unreconciled balances come in a variety of shapes and sizes. I had once a client who refused to accept charges from related parties without the required credit memo or debit memo from the charging party. And it happens sometimes that a related party would pay for the company's expenses without issuing a debit memo to the company. As a result, the related party recognizes a receivable from the company, but due to the lack of a debit memo, my client did not accept a corresponding payable to the related party. So yung kabilang party na nagbayad ng expenses, charge na yun to related party account, pero yung receiving party, since hindi siya naka-receive ng debit memo, ayaw niyang i-recognize yung transaction na yun sa libro niya, and therefore differences occur. Unreconciled balances can also occur when the related party transfers materials to the company's production plant without the knowledge of the company's purchasing department. Kung minsan naman, meron silang transaction, hindi naman sinasabi doon sa related party. In this case, the receipt of goods was often not recognized by the receiving company as an amount owed to the related party. Accordingly, at the end of a particular period, the balances of the companies do not agree with each other. And these differences are discovered only when a reconciliation is performed. Sometimes, both parties agree with the occurrence of the transaction but disagree on the calculation of the amount to be paid. Kuminsan naman, alam naman nila both, ina-acknowledge naman both ng companies na talaga namang may related party transactions, but they disagree on the amounts. In short, there are numerous ways and reasons why intercompany balances do not agree with each other. So maraming sources kung bakit hindi nagta-tie up ang intercompany balances. But when significant differences in intercompany balances to our attention, for example, based on the confirmation we receive from the related party, we should request our client to provide us immediately with a reconciliation of the balances. So especially kung significant yung difference na nakita natin between the amount confirmed and the balance recorded in the books, we should ask for a reconciliation statement. So let's take this confirmation control for example. In this confirmation control, we see that EFG company disagreed with the company's balance by about 1.1 million. So ang amount confirmed was 4.7 million. Ang balance per libro is 5.8 million. So there's a difference of 1.1 million. Let's assume that this difference is material to the audit team. Therefore, we should ask the client for a reconciliation of this difference. Once we have the reconciliation statement, we should then test the significant reconciling items by examining supporting documents. So, hindi natatapos sa pagkuha lang ng reconciliation statements. We have to substantiate and verify the propriety of the reconciliation statements made. We should also verify, once we have the reconciliation statement, we should then test the significant reconciling items by examining supporting documents. We should also verify the propriety of the adjusting entries made by the client to reconcile the balances. This is one thing I need to emphasize. We always must verify the correctness of the significant adjusting entries being made by our client during our audit by understanding the nature and purpose of the entry and examining pertinent documents supporting the journal entries. We don't readily accept our clients' adjusting journal entries without proper substantiation of such journal entries, especially the significant ones. This is something na dapat lagi nating ginagawa. Hindi, pag nagbigay ng adjusting entry sa atin yung kliyente, not only for related party transactions, but for all other accounts as well, dapat hindi natin tinatanggap basta-basta yun. Dapat tinitingnan muna natin before natin ipasok sa work papers natin, sa working trial balance natin, kung tama ba yung entry ginawa ng kliyente. Kung ano ba yung nature, bakit siya may ganong entry, ano yung nature. Kasi sometimes there have been instances before na, let's say sa reconciliation ng related party transactions, nag-a-adjust yung entry baliktad. Nababaliktad ko minsan ng kliyente yung entry. Like for example, yung debit, yun ang naka-credit. Yung naka-credit siya yung dapat na naka-debit. So pag pinasok mo sa working trial balance, instead na mag-reconcile, lalong lumalaki yung difference. So therefore, dapat tinitingnan nating mabuti yan before tayo nagpapasok ng mga entry sa libro natin or sa work papers natin. Another substantive audit procedure that we perform is to review the terms and conditions of the related party transactions. Aside from obtaining confirmation replies and performing alternative procedures as necessary, as we have just discussed earlier, for loans or advances made to or from related parties, we also review the terms and conditions associated with such loans or advances by examining loan agreements and correspondences with the related party concerned. We can also examine the company's transfer pricing document when available. We also determine whether the accounting treatment is appropriate or in compliance with the relevant accounting standards such as PFRS 9 and PAS 24. Please note that if the management has asserted in their financial statements that its related party transactions were conducted on an arm's length basis, we are required under Philippine Standard on Auditing number 550 to obtain sufficient appropriate evidence about such assertion. So, kung nilagay ng company sa FS nila na the related parties were done on an arm's length basis, dapat gagawa natin ng procedure yon, and we have to make sure na talagang at arm's length yung related party relationship. Hindi natin pwedeng tanggapin yung assertion ng company na at arm's length siya. Dapat isa-substantiate natin yung arm's length basis na sinasabi na dinisclose ng kliyente sa financial statements. PSA 550 however acknowledges that it can be difficult to prove that a transaction was made at arm's length. So tanggap naman ng auditing standards na mahirap i-prove ang arm's length transaction. For example, verifying the sources of the internal or external data supporting the assertion and testing the data to determine their accuracy, completeness, and relevance is easier said than done due to the possible lack of readily available information out there to use for our evaluation. So, ibig sabihin, I would just like to say na ang auditing standard, tanggap niya na mahirap i-assess kung at arm's length yung transaction with related parties, but once na inassert niya sa financial statements niya na at arm's length yung mga transactions na yun, then we have to verify and to make sure that we will perform appropriate substantive audit procedures to make sure na talagang arm's length yung transaction. So, but the standard, as I said, the auditing standard, as I said, acknowledges that mahirap i-prove ng isang transaction was made at an arm's length basis. So, for example, we would be able to confirm that the price of a transaction between related parties was equal to or comparable to the market. So, kaya nating gawin yon. Pero, it may be difficult to determine if the transaction's other terms and conditions, such as credit terms, contingencies, and specific charges are comparable to those that would normally be agreed upon between independent parties. So parang sinasabi ng standard, pwede nating itest siguro yung price, pero yung ibang conditions na baka mahirap nang i-verify kung arm's length pa rin. As a result, there may be a risk that management assertion that a related party transaction was executed on terms comparable to those in an arm's length transaction may be materially incorrect. So nagkakaroon ng risk of material misstatement when it comes to related party transactions. And this is where the transfer pricing documentation that the BIR is trying to institutionalize would have come in handy if our client has one or is required by the BIR to maintain one. So kung may TPD yung kliyente natin, then good for us. This is because the TPD required by the BIR is extremely detailed. Let's make a rundown of the minimum information required by the BIR. Marami kasing hinihingi si BIR na information about the related party transactions and relationships. Please note, however, that we will not discuss these information requirements in depth because discussing the TPD in detail will require another training session. I will just give you an idea of what a TPD would need to have based on RR 2-2013. 2-2013. So at a minimum, ito yung mga requirement na dapat, ito yung mga information na dapat nasa TPD na required ni BIR i-submit sa kanila for identified companies. So ito, organizational structure, nature of the business or industry and market conditions, controlled transactions, assumptions, strategies and policies, cost contribution arrangements or CCAs, the comparability, functional, and risk analysis, selection of the transfer pricing method, application of the transfer pricing method, background documents, and index to documents. So, dapat lahat ito nandun sa TPD. Please keep in mind that having the TPD documents, however, does not automatically guarantee an arm's length transaction. Pero hindi naman ibig sabihin na meron yung TPD, arm's length na. As we have discussed earlier, we still need to verify the information presented in the TPD. But the TPD will be a good starting point for our evaluation of management arm's length assertion. So, hindi naman so as I said, hindi ibig sabihin na may TPD na, arm's length na. Kasi we have to verify muna based sa TPD kung talagang arm's length transaction yung mga kinonduct at arm's length basis yung mga related party transactions. So better lang na may TPD kasi may starting point tayo ng evaluation. Unlike kung wala totally, mas mahirap siyang i-evaluate yung transaction kung nakonduct siya at arm's length. If after our verification, we believe that the management arm's length claim is unsubstantiated or that we are unable to obtain sufficient appropriate audit evidence to support the assertion, then we should consider the implications of the result of our procedures to the financial statements and our audit opinion. So kung let's say in-assert ng kliyente na sa financial statements nila na the related party transactions were conducted at an arm's length basis, tapos hindi natin ma-verify kung totoo nga yun or hindi, then we have to consider looking at yung impact ng inability natin to verify na at arm's length yung transaction doon sa fairness ng FS and doon sa audit opinion natin. So let's now move on to the next audit procedure, which is to review interest expense and related accrued interest. For interest-bearing loans and advances, regardless of whether these are assets or liabilities, we review the propriety of the amounts of related interest expense, the propriety of the amounts of related interest expense, interest income, accrued interest receivable, or accrued interest payable if the amounts are considered significant by the audit team. For interest, we can perform an overall test of the reasonableness of the amount. Please note that a test of reasonableness procedure is a form of analytic review. But unlike the corroborative analytic review we performed in the earlier part of the audit, meaning the comparison of the related party balances at the end of the current year and the previous year, this time the analytic review will be used as the primary test of balance. So for interest expense, interest expense, interest income, accrued interest and accrued interest payable, accrued interest income, yung pag perform tayo ng analytic review, which is yung predictive testing, ginagamit na natin siya as a primary testing procedure, hindi na siya corroborative. So just as we have learned from the other training sessions about reasonableness, so primary test of balance ang paggamit natin ng predictive testing or analytic review. So just as we have learned from the other training sessions about reasonableness testing, we need to first develop our independent expectation about the procedure. So this is how we do our analytic review procedures for interest. The expectation can be a specific number, a percentage, a direction, or an approximation. It will all depend on the level of the accuracy we wanted our expectation will be. And then we define our acceptable range or threshold of the difference. The acceptable range sets the minimum and maximum amounts within which the amount of difference should be in. Where the interest is charged using the simple formula only, we can do test of reasonableness of the recorded interest by multiplying the average interest rates by the average interest-bearing balances outstanding. We then compare the result of our computation with the amount recorded in the books of the company and then determine whether the difference is within our acceptable range. If it's within the range, then we can conclude that the interest is reasonable. If the difference is beyond the acceptable range of acceptance, then we should investigate further the unexpected variance. For accrued interest, we can verify the balance of this account by performing a roll-forward analysis using the formula beginning balance of accrued interest plus the interest we already tested minus the collections for interest receivable or payments for interest payable to get the ending accrued interest balance per books. If applicable, we can also verify accrued interest by looking at the subsequent collection or payments made by the company. Another way of verifying the amounts of interest and accrued interest income and accrued interest is by comparing the amounts recorded in the books with the confirmation replies received from the lenders. In short, there are many ways of verifying these account balances and amounts. It is up to the professional judgment of the auditor which verification procedure will best suit the client's circumstances. Note that any significant difference noted in any of these verification procedures should be investigated and discussed with the client. So to give you an example of how testing of reasonableness is done, let's take a look at this case. The company receives advances from its affiliates. The advances bear an interest rate of 5% per annum and are charged on the remaining principal balance of each advance made. There was no change in the interest rate from the prior year. In this case, the total balance of the advances as at the end of the prior year amounted to 118,056,735. At the end of the current year, the total outstanding balance increased to 127,722,122. The interest recognized by the company for these advances amounted to 5,756,590 pesos in 20 CY and 5,390,340 pesos in 20 PY or prior year. We wanted to test the reasonableness of the 20 CY interest expense. So this is what we do. First, we need to set our expectation or expectations and our acceptable range of outcomes. What would our expectation be? Since 8% lang ang increase in the advances account, we also expect for the interest to show a similar increase. So, since 8% yung parang kumbaga sa ano, parang consistency lang yung expectation natin. Kung 8% yung principal, more likely 8% din yung increase doon sa interest because hindi naman nag-change yung interest rate. What about our acceptable range or threshold? Let us presume that in this case, the acceptable range set by the audit team is between 5 and 10% of the account being tested. I would like to stress and reiterate at this point that the acceptable range or threshold set by the team is critical to the effective use of analytic review that is being used as a primary procedure. It is therefore important that the audit team set this threshold or acceptable range very carefully and with much thought. And to avoid any bias, the acceptable range should be established before performing any predictive or reasonableness testing. And there is no hard and fast rule about the amount of threshold being set. It will all depend on the auditor's professional judgment based on their risk assessment process. So critical yung pag-set natin ng thresholds ng expectations natin and acceptable range. Yung threshold, yung expectation natin and yung acceptable range. Kasi pag mali yung acceptable range natin, edi kung pumasok doon yung difference, kahit na within that range siya, kung mali naman yung range, mali pa rin yung magiging erroneous pa rin yung test of reasonableness natin. And dapat sineset siya before tayo predictive testing. Kasi kung nag-predictive testing tayo, saka pa lang natin iseset yung acceptable range, then baka maging bias yung gagawin natin acceptable range. Meaning, pipilitin natin na maging na tumama yung nawalang error, basically nawalang exception na lalabas doon sa test of reasonableness natin. And therefore, para nga walang bias, dapat before pa lang tayo mag-start mag-predictive testing, alam na natin yung acceptable range na nakaset up or isinet up ng team for that particular account. So going back to our predictive testing, we added the beginning and ending balances of the advances from the related party and divided it by 2 to get the average outstanding balance. We then multiply the average outstanding balance by the interest rate of 5% and see if it met our expectation. So would the result meet our expectation and acceptable range? So let's continue. Our test computation resulted in the amount of 6,144,471, which when compared to the balance per books of 5,756,590 pesos, resulted in the difference of 387,881 or 7%. Based on the expectation and acceptable range we set earlier, can we conclude that the interest expense recorded in the books is reasonable? So let's check. We expected that the interest would increase by about 8%, similar to the rate of increase in the balance of advances from 20 PY to 20 CY. However, our test computed interest of 6,144,471 versus the prior year interest of 5,390,340 showed a 12% increase, which is way above our expectation of about 8% only. As to the acceptable range, we got a 7% difference, which when compared to the acceptable range of 5 to 10% is within the range. So ito within the range naman. As we said earlier, if our computed amount is within our acceptable range, then we can conclude that the interest expense is reasonable. If it goes beyond the acceptable range, we need to do further investigation. So in this case, can we conclude already as to the reasonableness of the interest, since within the range naman siya? But what about the expectation which was not met? Remember, yung expectation, yung acceptable range na meet, but not the expectation, kasi ang expectation is there should just be an 8%, about an 8% increase in interest. Pero ang actual increase was 12%. Well, we still need to clear that up, yung sa increase sa expectation, yung hindi pag-meet sa expectation. And based on the investigation made, this is the documentation made for which the test computed amount is much more than, for why the test computed, this is the reason documented by the auditor for the excess of for the excess in interest in the change of interest expense of 8%. The difference, ito yung documentation ng auditor. The difference is mainly attributed to the fact that this recomputation assumed that all the advances were made during the start of the year. However, in reality, it was noted that many advances were made during the middle and latter portion of the year, thus resulting to this difference. So basically, na-rationalize naman kung bakit mas malaki yung increase kesa doon sa expectation. So with all this taken into consideration, we can finally conclude that the interest recorded in the books of 5,756,590 pesos for the year 20 CY is reasonable. So I would like to emphasize that this is not the only way of testing the reasonableness of income and expenses such as this. The method of how we predict or test the reasonableness of accounts depends on our understanding of how the amounts are recorded in the books. For example, this method of reasonableness testing of interest will not work if the interest being charged is a compound interest. So kailangan kino-customize din natin yung predictive testing natin. Let us now discuss the next audit procedure, which is to scan the related party accounts. Since related party transactions could be sources of conflicts of interest or may have been engaged solely or in part or in large part by the related parties to commit fraudulent financial reporting or conceal misappropriation of assets, we should scan the related party accounts in the general ledger for unusual or atypical activities. Here are 4 examples of transactions that may be significant, unusual transactions with related parties. So these are the conditions or circumstances that we should be alert for or be worried about. First is complex transactions such as corporate restructuring or acquisitions. A good example of this is the baffling ownership structure of the Lotte Group we just discussed. Share swaps arising from mergers and acquisitions can become complex exchanges when the swap includes and affects both preferred and common shares, not to mention any share-based employee incentives or changes in voting rights, for example. A complex equity structure can lead to unbalanced and unusual control. Just take a look at the Lotte Group again. The cross-shareholding was so complex and baffling that the founder and his family was able to control the Lotte Group with just 2.4% of ownership. The second significant unusual transaction with related parties pertains to transactions with offshore entities in jurisdictions with less rigorous corporate governance structures, laws, or regulations. We should obtain an understanding of our client's purposes or motives when it sets up companies or consistently transacts with companies situated offshore, such as those in the British Virgin Islands, Belize, Cyprus, etc. We should also take a closer look at transactions with related parties located in countries with high anti-money laundering risk, for example. So when our clients have transactions with companies situated in these countries, dapat tinitingnan natin mabuti kasi baka source siya ng fraud. The next condition is the leasing of premises or the rendering of management services by the entity to another party if no consideration is exchanged. This is quite common among related parties. However, we should still get an understanding, kahit na common siya, we should still get an understanding of both related parties' motives in entering into these types of transactions because clearly, these are not arm's length transactions. Not charging another party, even if it is a related party, for say the use of a property, is a lost income opportunity for the owner of the property. Non-recognition of the rental income and expense between a parent company and a wholly owned subsidiary where the rent income and rent expense will eventually be eliminated during consolidation may be justifiable to the eyes of the management of the companies. But this is not so in the eye of the taxing authorities. So we should be alert for transactions like this while doing the audit of related parties. And finally, we should take a closer look for sales transactions with unusually large discounts or returns. Unusually large discounts given to related parties or significant returns received from related parties should get our attention for a closer look at the transactions. we should get an understanding of the reasons for these significant discounts and returns. Are they properly approved by the management, for instance? If we believe, based on our assessment, that this condition could be an indicator of a material misstatement, then we should examine even the transactions with the related parties right after the end of the year. I think I have mentioned this before, but there has been a case where a company wanting to present better results of operations and a stronger financial position recorded an unusually high amount of sales near the end of the year to its sole customer, a related party under common ownership, only for the related party to return a significant amount of the goods the following year. So the related parties colluded with each other to perpetrate the fraud. So parang nagpadding pinad yung sales ng company using the related party. So please note that there may be other transactions between related parties that could be considered unusual or atypical depending on our understanding of the company's operations, circumstances, or motivations. So we should always be on the lookout for any of these unusual transactions due to the risk of misstatements in the financial statements caused by fraud. The next audit procedure is to determine any undisclosed related parties. We are required under Philippine Standards on Auditing to remain alert when inspecting records or documents for arrangements or other information that may indicate the existence of related party relationships or transactions that management has not previously identified or disclosed to us either deliberately or because management is unaware of all their related parties. We must be vigilant, therefore, for any undisclosed related party relationships and transactions when we review or inspect any of the following records during our audit. So when we look at these following procedures that I will make a rundown of, make sure na tinitingnan nyo kung kung merong related party relationship na nadidisclose doon sa mga documents na to. These are bank and legal confirmation, minutes of meetings of shareholders, directors, and committees of directors, or summaries of actions of recent meetings for which minutes have not yet been prepared, third-party confirmations obtained by the auditor, in addition to bank and legal confirmations, of course, income tax returns, information supplied by the entity to regulatory authorities, shareholder registers to identify the entity's principal shareholders, statements of conflict of interest from management and those charged with governance, records of the entity's investments and those of its benefit plans, contracts and agreements with key management or those charged with governance, and such other records or documents as the auditor considers necessary in the circumstances of the entity. So essentially, in other words, any document that we review, I think we should be considering or checking kung related party transaction siya or related party yung katransact nung company doon sa document na tinitingnan natin. The next audit procedure is to verify the carrying amounts of the related party balances. Contrary to what some believe that receivables from related parties are not subject to impairment because of the nature of the relationship, related party receivables are in fact subject to impairment testing also. This mindset of related party transactions not being subject to impairment typically arises because a company tends to give more leeway to related parties when it comes to collection. Many advances between related parties in reality have no definite repayment terms. However, regardless of the presence or absence for that matter of definite repayment terms, amounts due from related parties, just like any other financial assets, carry that amortized costs are subject to impairment testing also. Accordingly, we need to verify and determine whether the carrying amounts of accounts with related parties are appropriate by inspecting the related parties' audited financial statements and other evidence to determine whether the receivables from and advances to related parties are collectible, and thereafter determine that the allowance provided for uncollectible receivables or advances to related parties are adequate, or if no provision has been made yet, whether an allowance is necessary to be provided. So, hindi ibig sabihin na yung mga receivables natin from related parties are not subject to impairment testing. Sinasubject pa rin natin siya to impairment testing. Dapat sinasubject pa rin natin yung mga receivables and advances to related parties to impairment testing. The next audit procedure is to verify the existence of restrictions, pledges, liens, guarantees, etc. For disclosure purposes, we should inquire whether there are any restrictions, pledges, or liens on any of the amounts due to or from related parties. We also inquire if there are existing guarantees between and among related parties. Aside from inquiry, we also examine minutes of meetings, bank and legal letter replies, correspondences, and other documents we inspect during the audit that could reveal the existence of any of those conditions related to related party transactions. So this is something that we should always be looking for, yung mga restrictions and pledges involving related party transactions. Finally, we verify the disclosures made regarding related party transactions. We must evaluate whether or assess whether the related party transactions have been properly accounted for and disclosed in the financial statements. This includes evaluating whether the financial statements contain the information regarding relationships and transactions with related parties essential for a fair presentation in conformity with the applicable financial reporting framework. There's various information required to be disclosed for related parties under the different accounting framework. Accordingly, we need to ascertain that all the required disclosures under these accounting frameworks are disclosed in the financial statements, and it will be best that we have with us a checklist of the required disclosures when we review the company's financial statements. So, actually, that's the last audit procedure that we do for related parties, or at least the last procedure substantive audit procedure that we will discuss in this training session. So with that, let's go now to the disclosure deficiencies noted by the SEC about related party transactions. The SEC published recently a compilation of the material findings they noted on the 2019 audited financial statements they reviewed. So let's take a look at the findings that they had for related party transactions. So these are basically the disclosures that you should also be you should be making sure to be present in the financial statements of your companies of your clients kapag may related party transactions yung client nyo. According to the SEC, a common finding is the company's failure to disclose the nature of the related party relationships. The SEC also noticed a common disclosure for related party transactions that says that due to basically ito daw yung nakalagay doon sa FS nung company that due from related party account, ito yung disclosure, due from related party account has no fixed repayment term. In this regard, the SEC stated that such receivable from the related party should be recognized among current assets since it can be implied that it is payable on demand. So apparently, The reviewed companies classify these receivables with no fixed repayment terms as non-current, which the SEC disagreed with. So, improper classification. So, when our clients have this, actually parang ano to medyo common na yung mga advances to and from the related parties walang fixed repayment term. So, pag nilagay ng client doon sa FS nila na walang repayment terms, ang expectation is dapat current asset siya or current liability pag no fixed repayment term. So, make sure na tinitingnan niyo yon doon sa mga kliyente ninyo, no? Na kapag yung client ninyo, make sure na kapag yung client ninyo, no fixed repayment term yung term nila for the receivable or payable to the related party, dapat nasa current asset siya. Otherwise, pwede kayong i-penalize ni SEC, hindi kayo, yung kliyente, i-penalize yung kliyente for improper classification of the account balance. Another SEC finding is no disclosure was noted about the name of the company's ultimate controlling party, irrespective of whether there have been transactions between them. So please note that the accounting standards require that name of the parent and, if different, the ultimate parent or controlling party. If neither the parent nor the ultimate parent produces consolidated financial statements available for public use, the name of the next most senior parent that does so shall be disclosed. We also mentioned earlier that a related party transaction can exist between related parties whether a price is charged or not. So ito, hindi dinidisclose yung ultimate parent or ultimate controlling party. Another SEC finding is that the SEC noted that a common deficiency in related party disclosures is their incompleteness. Common information daw not disclosed according to the SEC include the date of maturity, whether the related party transactions are secured, the nature of the transaction or the nature of the consideration to be provided in settlement, the details of any guarantees given or received, the key management personnel compensation in total, and for each of the following categories, ito yung mga hinahanap ni SEC. Short-term employee benefits, this is for the KMP or key management compensation package, key management personnel. Post-employment benefits, the amount of post-employment benefits, the amount of other long-term benefits, the amount of termination benefits, and the amount of share-based payment related to key management personnel. But please note that the deficient disclosure for key management personnel na dinisclose ng SEC or pinablish ng SEC is applicable only to companies using full PFRS. Under PFRS for SMEs and SEs, key management remuneration is to be disclosed in total. Hindi siya kailangang na naka-breakdown. That is, there's no requirement to break the amount down into short-term, post-employment benefits, etc. So, pag PFRS for SMEs, total ang dinidisclose, hindi siya pero pag full PFRS, kailangan naka-breakdown yung key management compensation. So, let's finish this discussion of auditing related party transactions by discussing the most common auditing deficiencies as collected and analyzed by the American Accounting Association, or AAA, based on the SEC's accounting and auditing enforcement releases. This study was carried out many years ago in the United States based on the US SEC's actions against auditors related to the audit of related party transactions. While the audit was old and covered US audits, I think that the same audit deficiencies persist to this day and that they still apply even in the Philippine context. So, kahit na sa US to yung mga findings na to, I think applicable pa rin siya applicable din siya sa Philippine setting, and therefore we should be aware of these audit deficiencies also. So let's briefly discuss these three major audit deficiencies based on the AAA's study. The first common deficiency noted by the USSEC is the auditor's failure to identify related parties and related party transactions. According to the report, despite readily available information, a large majority of the audit cases AAA reviewed appeared to have failed to recognize related parties and related party transactions. Auditors failed to recognize related parties and related party transactions. In one case, where a fraud was committed, the auditors claimed that management had represented that the company had no related party transactions. So sabi ng auditor, wala daw namang related party transaction. However, the USSEC noted that at least 5 documents in the auditor's work papers showed that the company's president was not just an officer of the company, but also a director and controlling shareholder of the investing company that was used in perpetrating fraud in the financial statement. So, yung work papers did not support yung claim ng auditors na hindi sila aware ng merong related party transactions. In another case, the auditors were aware of the existence of loans but failed to recognize them as related party transactions. However, the SEC cited red flags that could have alerted the auditors to the possibility of related party transactions. Some of the red flags mentioned by the USSEC were: 1, the loan was large, isolated transaction made immediately upon the closing of the company's IPO, accounting for nearly 25% of the net offering proceeds. Another is there was no interest paid on the loan. Another red flag for a related party transaction is that there was no written agreement or record detailing the loan terms or purpose of the loan. So sinasabi ng SEC, yung conditions lang na ito are already red flags na may possible existence of related party transactions. So another audit deficiency noted by the USSEC was the inadequate examination of related parties and transactions. For this deficiency, the auditors either knew about the related party transactions or that the auditor should have known about them but failed to perform the appropriate audit procedures. This audit deficiency was categorized in the report into 4 categories. The first category is no procedure performed. In the SEC's report, 2 cases illustrated situations where the related party transactions were identified by the auditors, but the auditor did not perform any audit procedure on them. In one case, the top executive instructed the auditor to reclassify the related party transaction from related party receivables to accounts receivables to conceal the relationship. So ito yung pang-kliyente ang nagsabing itago yung related party transactions and pumayag yung auditor. In another case, the SEC noted that the company's finances were not separable from the finances of 4 other companies which were under common control with the company. Another category under the inadequate examination of Rpts or related party transactions is inadequate procedures performed. So may procedure na ginawa naman pero inadequate. In one case, the auditor performed some testing of the related party transaction, but the testing done by the auditors appeared to have not been done diligently. According to the report, the auditors rightly identified and questioned payments to a related party. However, they were given fictitious supporting records and documents, including fake board meeting minutes. However, there were several inconsistencies in the company's records that indicate falsehood of the minutes. For example, there were references in the minutes of the meeting about information that was not available until months after the records were created. It can also be inferred from the SEC report that a party to a material related party transaction was a convicted felon because the SEC's report stated, and I quote, "Because this was a material related party transaction involving a convicted felon, the auditor should have closely scrutinized the evidence supporting the individual's expenses." End, end quote. Nevertheless, the auditor failed to review the evidence obtained and therefore failed to consider whether the minutes had been fabricated. I would like to stress, though, that just because an officer of a company is a convicted felon, that we should automatically assume that a financial statement fraud could have been committed. For one, if a matter such as this comes to our attention, I think we ought to know the type of crime committed by the officer. If it's about financial fraud, then we may need to be concerned. But if it's, say, a crime of passion, then maybe the financial statements are safe. What I'm trying to say is, while the integrity and motivation of management are important factors to consider in our risk assessments, I think it's best not to put an immediate stigma on ex-convicts. The third category is inadequate procedure performed regarding assets obtained in related party transactions. Two cases showed audit deficiencies in valuing properties acquired through related party transactions. So the US SEC cited the auditor in one of the two cases for relying too heavily on management claims about the value of a fake patent and a racehorse that were both purchased from the company's officers. The patent was valued at $225,000, but the patent, it turned out, did not exist at all. The racehorse, on the other hand, was valued at $1.1 million without valid support. So ito basically, yung auditor nag-rely lang siya sa mga assertions and representations ng client without performing sufficient audit procedures to substantiate yung claims ng company. The fourth category is the failure to impair related party receivables. This is what I was saying earlier. Dapat sinasubject natin to impairment ang receivables from related parties. In this particular case, the auditors failed to recognize that the related party could no longer pay the company. It was inferred in the SEC report that the auditors did not review the financial statements of a related party because if they had, then they would have concluded that the secured receivables from the related party could not be repaid from such related party's cash flow. The auditors apparently assessed that the receivables could be repaid by liquidating the collateral to the receivables. It turned out that the collateralized assets were mostly acquired by the related party from the company before. Also, the auditors relied on the estimated fair market values and property appraisals provided by the management. The property appraisal, however, was performed by the brother-in-law of the company's CEO who was employed at the time by a subsidiary of the company. So, napabayaan nung auditor yung testing for impairment. The last common audit deficiency noted by the SEC was similar to Philippine SEC's findings then, improper disclosure of related parties. For this deficiency, there appears to be little doubt that the auditors identified related party transactions and performed appropriate audit procedures except on financial statement disclosures. So these are the examples given by the US SEC of improper disclosure. In the audit of one company, the SEC states that the auditors knew of consulting agreements with officers and directors, but failed to insist that management disclose them in the notes to the financial statements. The transactions were identified by the auditors as related party transactions in their planning work papers. Other documents evidencing that the transactions were made with a related party were also filed in the audit work papers. The most incriminating evidence, however, was the fact that the audit manager even left a review note on the company's annual report to disclose consulting fees as related party transactions. So parang in effect, yung work papers, hindi niya sinusupport yung nasa financial statements, which we should definitely avoid. Dapat kung ano yung lahat ng nakadisclose sa FS, yun din yung nasa makikita sa work papers natin. In summary, AAA concluded that the audit deficiencies in these fraud cases were more the product of a lack of auditor professional skepticism and due professional care than any deficiency in existing auditing standards. And I think we can agree with that. If we would just be diligent, have the appropriate level of skepticism and knowledge, and give our 100% when auditing related parties, then there's a big chance that we may be able to minimize the risk of material financial statements relating to these transactions. So, kung hindi ang essentially sinasabi ng USSEC, hindi nagkukulang yung auditing standards, yung mga procedures na sinasabi ng auditing standards. It is more on the performance of the auditors. So hindi diligent yung mga auditors in performing their job basically. So which brings me, so kasi dapat 'di ba sabi ko 100%, dapat kung mag-audit tayo ng related party transactions which is very much susceptible to fraud, dapat 100% yung ginagawa natin, yung effort na ibibigay natin for related party transactions. And not just for related party transactions, of course, but for all other accounts as well, especially with revenue. So, which brings me to leave you all with this quote from the actor Bill Murray, which is, whatever you do, give 100%, except when you're donating blood. So, thank you very much. So that would be the end of our training sessions for today. I received some early questions earlier. Let's just go through them siguro before we end this session. The first one is, it says detailed audit procedure. So I think we discussed this na kanina in detail. All the procedures in detail. Inisa-isa na natin lahat ng procedures. Substantive audit procedures that that are typically done for related parties and related party transactions. The next question was how to effectively audit Rpt. My answer to this is we should perform or conduct appropriate risk assessment process to identify the risks on our clients' related party transactions. So dapat maayos yung risk assessment procedures na gagawin natin so that we would be able to identify the right risks, audit risk. And then we should design and perform the appropriate substantive procedures that would be able to address the identified risk that would respond to the risk that we have identified during our risk assessment process. And of course, we should always practice an appropriate level of professional skepticism at all times, especially for related party transactions, because prone siya to fraud. So those are the things that we should do to effectively audit related party transactions. The next question was, what is the effective substantive method or procedure for Rpts? As I said in other training sessions, for an effective substantive procedure is one that is able to address and respond to the audit risk identified by the audit team during the risk assessment process and also during the field work na rin. So pag yung substantive audit procedure hindi siya nakaka-respond dun sa identified risk, then magiging ineffective yung audit procedure natin. What are the common transactions of Rpts? I think we touched that earlier. So normally ang common talaga is yung advances, yung giving of advances from and to related parties, yung loans, yung sales, nagbebentahan, sales and purchase among related parties. Sometimes yung leasing between related parties. Those are the common related party transactions. But as I said earlier, any transaction that is done between related parties is considered a related party transaction. Basta related party siya na transact, then that is a related party transaction. The last question I got earlier is, it says various transactions and identifying Rpt. We are actually required by Philippine auditing standards to, as I said earlier, to remain alert when inspecting records or documents. So I think kanina, binanggit ko yung mga documents na dapat when we look at those documents, dapat tinitingnan natin kung mayroon siyang related party transaction. So that is one way of identifying related party transactions based on the documents that we review. Another is we ask, kunwari tayo yung primary auditor, tapos may secondary auditors, let's say another firm, then we ask that firm to confirm na yung hawak nating list, binibigyan natin siya ng list of related parties, pinapa-confirm natin yung ibang auditing firm kung meron pa silang alam na related parties na wala doon sa listahan natin. So that's another way of identifying related parties. There are several ways. There are a lot of ways of identifying related parties, but mostly it's either through inquiries and of course, examination of documents na ni-rundown natin kanina, like yung sinasabi ko nga kanina, mga bank confirmation, legal confirmation, minutes of meetings, mga contracts and agreements, mga income tax returns, yung GIS, kung merong mga entities sa GIS na nakipag-transact sila dun sa mga entities na yon. So that is one way of identifying related party transactions. So I think that's it. Meron kayong question after this training, then just feel free to contact me, and I will be very happy to discuss with you the substantive procedures that we typically perform on related party transactions. But just keep in mind na pag related party transactions, we should be wary of any possible fraud. Hindi naman automatic, hindi naman natin sinasabi yung kliyente na pag may related party transactions, may kinocommit na silang fraud. Sinasabi lang natin, susceptible kasi siya to fraud, and therefore, dapat extra effort tayo sa pag-audit ng mga accounts na ito. So, thank you very much. This is our last training session for auditing of accounts. So, kung magkakaroon kayo ng question about any other accounts, kahit dun sa mga dati ng training sessions, just feel free to contact me. Thank you very much, everyone.